Hello everybody, it is I, Tradespotting, your local charting expert, here to give you a live show on GME and AMC. And we got a fax request for BA, that'd be Boeing Company, bada bing, bada bong, bada Boeing, on NYSE, so we'll have a look at them. This is the charts, this PayPal, we did an update on it earlier, fax request. You can get fax requests in me 24/7. I'll get to it as soon as I can. Make a charting video just like these ones on any ticker you want. And then I'll tweet you the video, personalized video right at you. It's like a little thing I'm doing at the minute, like an experiment. 24/7, anytime you want. So we're going to have a look at Boeing, bada bing, bada Boeing shortly. We're going to look at GME and AMC. We're going to start on GME. And we're going to start on the weekly time frame. We're going to go on price action alone. And we're going to turn off the drawings. And turn off the moving averages for now. You see we have just the Donchian channels and price action. Price action, baby. Price action. Right back action, action. And this is the Donchian channels, right? They give you low within the look back period that is on the weekly time frame. That's not particularly relevant, but I use 14 at the minute. Right, so price action on the weekly. You can see you've hit the top side of the Donchian channels. You've got a wick. Looks a little bit like a rejection wick, but price action subsequently held in a positive candle. Then you had bearish. Took you back below. Is this potentially a bull flag on the weekly time frame on GME? Well, it could be. You have previous to this put in a big downtrend. You've had a second low. At that second low, prices were bullishly divergent, and you had that on the MACD and the RSI. Subsequently, you've had a cross on the MACD. You're above your own moving average, and you've made it above the center lines. So that's very positive in the context of the Donchian channels. You've had one touch off the top side. That's where it now is, subsequent to having got there and retraced, and the look back period now not including this candle from the 27th of November. So this is now our area to break, our resistance level as it were, and we can keep our drawings off. I'll put new ones on and construct a chart for us here, holding the basis line and the Donchian channel at the minute. As I say, bullish divergence on the low of our indicator, that's very positive. And we'll take the Rockies DMI as an extra confirmation of trend, and you see you had that cross, but the ADX didn't come with you, and you failed to break previous horizontals, that being important ones in at 228. I'll just drop these on the charts now because why not? Then the next level will be up around here, 320 bucks, and then underneath those levels, but still above us, around 132. That's one. And on the weekly time frame, then you come back down to your previous low. And after that, big drop off on the weekly chart, right down to 40 bucks, right? That would be the lowest level of support you could possibly find on this chart in a bullish thesis. And then on the top side, you'd be looking at extensions beyond that level on its most extreme, obviously to your ultimate high up around 483 bucks. So that'd be the top side, and that'd be how you draw out your support and resistance on the weekly time frame. Drop down to the 5 day. There's 5 days in a week. Rocky outcrop flash way down here, not happening anytime soon, if ever, because of the nature of that breakout. Then this is a positive bullish engulfing formation, or is it very close? Perhaps very close. Anyway, since then we've retraced. Speaking about this potential bull flag on the weekly, 5 days, a similar picture there, and could be start of a reversal in price action from this previous downtrend. As you can see with these Donchian channels, you've put in low, low, and another low, right? That means that this trend persists in all the different ways you might measure it. You can say you haven't broken the high and you continue to put in lows, and that hasn't changed yet. This is not a higher high. You need to see that on higher time frames to speak to the trend breaking up there. On this 5 day, you've also managed to recover the euro moving average and get a positive cross in the MACD. Now let's start with add back on some of these moving averages. We'll just start with the, in fact, maybe just keep it like this from now on. There's a 200 period, and we'll advise, we've chat with Rocky about how we're going to do this in future. between the shows. So anyway, there's moving average, 200 period moving average, price actions above it. You've had your cross. You're doing all right on the MACD and you're doing all right on the RSI. You're also, as we spoke about on the DMI, confirming that trend. The ADX isn't coming with you. Down to the 2-day time frame, and you can see you're resting on that 200 period moving average, haven't fallen below it, put in bullish divergence, recovered above it, failed to break levels above that would be considered resistance, and are holding the basis line of the Donchian channel along with the 200 period moving average on the 2-day time frame, with the bullish divergence capturing the center line RSI and a positive cross on the MACD, which is taking you up to a certain level. That level from the high on this formation to the lows towards the golden pocket, right? That's where you've got right there, right in there. And if I think that deadly accurate, who knows? So in this low, right, if it was that low, subsequent to that low, actually not the Fibonacci, it's down here. And as you can see, these Fibonacci levels then match up with our horizontal levels of support and resistance. In fact, most of them are quite important. And then this is the other Fibonacci that's relevant from that high, subsequent to this low, this high here. So we'll take it from that area, moving left to right to the lowest part of the trend. That's our most recent low. And until that changes, things have not changed, right? The 618, that's also there. You can see where you found resistance. You can drop that level in now, update that. You can see it's perfectly in line with our most recent resistant level. It's a golden pocket retracement, having recovered to 236. There, Tradespotting. That's pretty nifty. Here's your bullish divergence. It's like all the ways, you know, it's worked its way up from these low time frames to significant levels. You also had, of course, your cross on the MACD that came as price action went through the 200 period moving average. So this was a bullish check qualifier on your signals, which you're getting a positive one of here. And at exactly the same time, you had that cross writ large on the DMI, and on this occasion you also had an increase in the ADX, confirming that trend break. So on this time frame, down on the 2 days, you have conceivably broken that lower trend. You have put in a higher high than this area. Obviously, you can see that. This being high, subsequent low, right? Low, high, lower low. So if you judge that to be a high, you can obviously say this is a higher high. RSI is recovering at the same time. That's confluent. And as we spoke about, you've got those other bullish signals. If you're looking across back here and you're saying this is the high, then that was touching the bottom of the bullish control zone at that moment. You lost your moving average and you broke and put in lower lows, right? It was a continuation, this lower low trend on this quite a significant time frame. If you're taking that as your high, you got up and around those levels. So on the RSI, you tested the resistance you might expect to find. You didn't quite reach the same level on price action. So it may well be that price needs to get up there to answer certain questions, right? That would be where you'd find the resolution of tests that come around here. Successful tests of support would be up around these levels, $320. That's really good news for GME, that would be the significant level you'd look to after holding really important levels here. And that breaking that previous high in at around $200, that would be your next area to look to. 886, probably around 294. That would be an important level to break, to say that you defeated this previous downward oscillation. But it's interesting, it's relevant, and it's coming up on price action soon. So everyone will be glad to know about that for GME. Taking across the top side of this, you can say, well, perhaps we have met this downward sloping supply line. Price action then didn't necessarily need to meet this horizontal level. We're on a 2-day time frame. This is a significant period of price action that's been covered here. You could say very robust TA, which suggests you'd find resistance at these levels. If you can then persist above the 200 period moving average, as you can see, this is constraining price action in this pattern that we identified as potentially a bull flag, but also it could be a scallop, and that would be an inverted J, as you can see there. Shout out to everybody who's just done the pattern trading section of the course. That's obviously the 15th or 16th main category that's been added so far. Fantastic course, check that out, link in the description. And then you would perhaps look at this and say, well, within this period, we were in a downward sloping channel. And then you'd get a measured move from that side of it. If this was how things were to progress, you might take an implied target from the broad part of the pattern. You'd then use market structure to look for confluence. Not that you need to, because it's Tradespotting, he does things clinically. There you go, 483 odd bucks. That would be the full extension if you were to turn this into something that was a start of a positive move that then might result in retests of these previous horizontal levels. The market structure at that point would be very much in flux. We'd have to look and see what was going on with retests. And that would be what you'd be looking at. Exciting stuff. Is it happening imminently? Well, not 100% sure, right? You've just met the top side of this channel. And once you've done that, you'd usually expect to come back and find support. And this has been a downward sloping formation. So it may well be that price action comes in around these levels again. That wouldn't be that terrible, because I speculate that this is all a period of accumulation. You can see at the most recent low within this formation, it's the first instance of bullish divergence. And so perhaps at that stage, you get one test of resistance, you meet market structure, you come back down to find support, and that could be your 200 period moving average on the 2-day time frame. On the daily time frame, you've lost that 200 period moving average, right? That's very important to note. You can see that your Donchian channel there on the daily is catching up with you. Let's adjust it now that we're down here back out to the 20s. Cheers, buddy. And you can see that there it comes in confluent with your almost lowest level of support. Now that it's updated by a day, you see it reaching up around second most lowest level and around $100. That would be a positive area to find support on a wick. If I've got a body close then and around 120, right? That, a huge percentage part of a wick, but this is volatile price action. It would come down, close that gap. Any test of 120 would be a strong buy. In GME, Tradespotting's perspective on GME with regards to technical analysis. I know we talk about how you buy it all the time, I certainly do, but also on top of that, you want to get the best possible buys. And then other times you'll say, well, what's Tradespotting's opinion on this? Just purely nothing to do with MOAS. And from an investment point of view, then that level there at $100 is a strong buy. This level up at $120, that's also a strong buy. And then subsequent to breaking this, that's a strong hold, and that's got nothing to do with MOAS. It's just straight up common sense. Price action doing well. Indicators agree with you. It's down to the daily 4-hour time frame. Here you've got this price action with the bearish divergence on the most recent peak that speaks to why price action came back down. Your 200 period moving average likely going to find support in those areas. Your Donchian channels were providing some resistance to moving lower. You did find that you couldn't get above 150 when you came back for the retest. That is a significant level horizontally, and it may well be that this is the range then that you pay attention to for the next wee while, and how far it gets back down would speak to how positive the move on the top side could be. And you can have a little quick sneak peek at what that might be by taking out this Fibonacci retracement tool, saying you've lost a 236. Your 200 period simple moving average comes in at a 50% retracement against the top side trend. That would be a perfectly sensible and reasonable area for price to bounce at. But then there's the bottom of the golden pocket in at around $110 or 108, and that's a strong, that's like the price action at any of these levels could bounce. And if it did and hit resistance, having tested it once, twice, only come back from a bearish oscillation to test it again without having gone back down and tested support fully after a bullishly divergent low in what might be an accumulation formation, is so very, you want to be hitting that like button if you haven't it already. And congratulations for being a GME investor. So there you have this positive potential coming through. Nope, negative actually, with the DMI crossing, DI negative crossing, DI positive back down. ADX not speaking to positive information there. You've got a cross on the MACD at this stage, which gave you a valid sell signal, but then in here you've now price action above the 200 period moving average, getting a potential cross and a potential buy signal. If you do get a recovery at any bounce on this here, it's going to give you positive signals as long as it's above the 50% retracement, and that happens in the longer that goes on, the more 200 will pull up. So there's a degree of let's do it now feelings. Imagine there are inverted head and shoulders on RSI at the previous low, head and shoulders at the top, a divergent right hand shoulder, most volume on the first shoulder of it. So that's confirmation that was a proper signal. You got the full signal. So where's the full range take you from that then? Right, it's going to go down to the 618, like as if we don't already know. As if we don't already know. Well, it depends where you put your neckline in, but yeah, in around those areas. So 107, maybe it goes the whole way. Right, maybe that's a sloppy neckline. We're going up that way. Break it in around this level here. 786 retracement down to there, just slip it under $100. That'd be a really, really strong buy. That looks fantastic to me. And then your extensions within that move might be really, really nifty, right? It would be back to these sort of levels, the 113. Maybe you'd take that ahead of the horizontal. I probably would. The 1618 extension, that would be like, boom, crazy prices straight afterwards. But let's take this down because it's also confluent with the 86, the previous Fibonacci. That's a zone there. You'll likely find resistance and the 86 topside as well. Devin Doherty, jumping Jesus, the puppet has come to life and started doing technical analysis. Boom! Thank you very much, Devin. That's appreciated. $5. Cheers. Cheers. So that's nice. Thanks very much. You know, appreciate it. That's very generous. Obviously. Thanks. There you go. So if you're watching this, you appreciate GME, you think what I'm doing is good, and you think it's worth your time, and you think it's worth me keep doing it, and that, give Devin a pat on the back and a thanks for contributing to the success of the channel. All the work we do here, right? Everything else we do on top of that. Thanks, Devin. Yes, it is, and it is just like it, right? That's the truth, right? I know we have a joke about the puppets, but you'd get better financial advice from a puppet of me than you will of fucking most people on planet Earth. Jimmy, you're the best GMT in the world. Thank you very much, Magic Gear. Thank you very much. It's a true story. There's the 4 hour, that's a very significant time frame. You've got everything you possibly want to know about momentum. And if you were looking at this from a swing trading point of view, which shitloads of people are now, just because of the nature of like how many people have got involved in it and locked down the float and how that's attractive to swing traders anyway that don't really care about the asset, but they can see that the conditions look good. They're going to, this is interesting, right? Especially with the 1, 2, 3 lows in that. Boom, right? So you're not as divergent on the 1 hour on the lows, but then you'll be looking between different areas, and very much so you were at this point, right? So hold these levels. You can see that between the 50% and the golden pocket would also be the basis line of this downward sloping channel. There's loads of different ways you can draw channels. Like I could draw one like this, or the parallel channel. You can take it from that high if you want, right? It's all the same. Doesn't matter. Take it from that high if you want, and then take it from these lows or other ones if you want, and that would give you the basis line. And as we see, depending on where you meet that, right? This is blue serrated. Right, you would be either at the 50% of the golden pocket, and depending how long it takes to break down, then that'll probably be an interesting point. If it just happens straight away, or if it takes extra long, then maybe you'll hit it at the 786. Whoop, boo. That's super good TA there. That's the GME side of things. Sugar, I didn't record it. I was going to make it a clip. Hey, I was going to make it a clip. I didn't record it. Silly me. Well, that's the GME TA. Oh, hope you enjoyed it. Hope you enjoyed it. Start recording. I could start recording and make an AMC clip, but then you know that I'm going to get all the haters on me like, why didn't you make a GME clip? And it's like, well, why don't you do anything to help me ever, you know? Anyway, yeah, just hate on me and that like they all do. Anyway, AMC, where are you? Where are you? There are you. There you are. Right, so price action fell below this level, broke out of that Fibonacci. Where's the low? Where was this taken from? Oh, this was a speculative one, as if we were going to retrace already. We were in the downward sloping channel there. Let's go back to the daily time frame. Here we get ya. Here we have you there. Right, you've got your Fibonacci based time zones coming through. That was very confluent. That high should have leapt in $10. Hey, how you doing? The second fib you took had a high at 345 level and mentioned that that was the second most significant level. Why would that be more significant than the more recent high at 250 fib? Thanks. Yo, Lepton. That's a great question. Where are you, Jamie? Get back and answer Lepton's question. Thank you, Lepton, for that. This Fibonacci here you're talking about, I took that from the $250 high here. How you doing? Second fib you took had a look high at 345. Wait a minute. There's the first fib here. This high 500, 480. 480 was the first fib. Second fib I took was where? Like I mean, the second fib that I would take here. This is the dominant retracement, right? So it's a retracement tool, Fibonacci retracement tool. And so we're speculating to the bullish side. And we think that then the retracement that we'd be measuring will be against our bullish move. So it would be measuring these downward things. And then the most dominant Fibonacci that controls price action in the minute, because its starting point and its low both exceed where price action is at the minute, and we haven't gone beyond either of those two ranges, would be this first fib. So that's why I drew that one on. Though this isn't exactly what you asked, trying to sort of answer it here. If you were going on the, we think that this is the wick-off distribution, we're likely got a very strong bearish case, then you'd be taking this as your area and you'd be saying this is a retracement. Any of this is just the slow petering inevitability of it falling down under its own weight. You'd be taking it as this low and you'd be taking it to this high, and you'd say there it goes there. And there's still like, these are all relevant too, right? You'll find stopping and starting moves from these on the downtrend too, because they're being used on the other way. And Anyway, right, so you can, but I'm not doing it, and I'm not really adding to that case. Hi, Coco, how are you doing, though? So that would be like the first bearish one, and then without that, it's very difficult to break out with those, right, because you've got a high that you've not yet exceeded since, too. So there's two really dominant fibs, and then I'd say within this trend, right, the price action changed here when it went below the 200 period moving average, right? There it went below it. So I'd say this is another, right, to change from these lows where price action went, even though it was much lower, it was still above the 200 period moving average. So it's a different inflection with regards to trend, and these are all dynamic variables. So price action was below the 200, now made it back above it. So I'd be saying at this point then, whoa, get out of my face. I'd be saying the next Fibonacci to look to would be when it was above there, right? And that was in a positive trend, and take it to the low, which might be in around here. Or might be in around the ultimate low, which was what we came to at the minute. And then you're like encompassing all of price action from the second high after this previous one, right? So let's call that a very enthusiastic move that doesn't necessarily reflect the continuation of price over this consistent period of time, right? So like partly anomalous in that it's range and volatility. So then we'll say like this area then, the next one, it would be more reliable perhaps, and then you got another touch of it. So you've got two things saying that's another reason why maybe. Sarah, thanks. Okay, Jamie, I need you to pay close attention. I'd like you to take a look at pizza charts. Okay. I'll take a look at the pizza charts in a moment, Sarah. And you can see, so what was I saying? So why did I take this? So I think there then, you had, how are you doing? You had the high at 340 level. I mentioned that was the second. Is this 340? What is it though? Yeah, oh, it is 340. No, wait a minute. Is this next Fibonacci? Yeah, no, that's the high of it, of the retracement. So this is the retracement from that high, yeah. So then I'd say this is again, that range of this price action extends. It includes everything that's happened since. So like it's not been defeated yet, this Fibonacci. It's not been defeated, nor has the previous, and I'd say then more dominant one, which is like extends beyond both areas of price action, and it's very relevant, right? This 618 golden pocket area, you know, like right, it's super obvious that's important, just as the same way like the 200 simple period moving average is important. You can see all like the definitive moments in price action within the trend that have come at that level, you know, so many of them. All of them, 618 golden pocket of that most dominant Fibonacci, despite the fact that they've got other confluent areas within these other fibs. And then, so that's what's it. And then what you're asking then is, why is it more interesting than the current one, right? Where you'd probably be searches. Why would that be more different than the more recent high of the 250 fibs? So you're talking about this high in around here, right? Where is it? Yeah, in around these two highs. So this is the third Fibonacci. And yeah, that's super relevant for price action at the minute too, right? I was speaking to the long-term technical analysis across this formation, and this most recent fib that we talked about here, it covered like when the trend changed and the bullish divergence came in. So like that's like really interesting, and like there's nothing to say that's more pertinent information to be derived from this most recent fib, though there are rows of information about it, right? So you would take that in from that high 250. We'll do it over here so it's slightly clearer, easier to see. Take it to your low, and you can see the 236 at this level. It was where you previously also had a horizontal support before breaking down. You got through that, and you got through the 236 at the same time with pace, and it led to price action moving up. You can see we've already got a horizontal level there because it's defined from different reasons, and it's significant. And then you went through the 236 of your previous Fibonacci, the one that I'm talking about from a bullish perspective, the big one. You can see you went through that 236 as you went through the golden pocket of, well, I mean, this is subsequent, right? You can see that this turned down now, and this speculative fib we drew on price action to detail where the possible retracements were coming in at. That's confluent with a 236. It would also be a golden pocket in here, so that's another reason why it might be that price action comes back down to around 110, 111 bucks. And if you look to the right, you can see that's also a 50% retracement on this current trend, which would be like totally typical like of that Fibonacci that you're talking about leapt in. It would be 50%, and that'd be cool. That would be a retracement back up away again. Then you maybe say, well, we could take that 886, that 116 extension from this most recent Fibonacci. Because it's, well, I mean, this is confluent with our other fib. We haven't yet, see this, wait, that's the one that's going, everything's in my way because I did this one in the middle. Get out of the way, right? I'll go back again, put this one in again, 250. Down to the low, And the golden pocket at this stage where we price action is just under where we're counting at the minute, and confluent with that close of that gap in around 122 bucks or so. And that would be that level, you know. And then you do, it's like, it is very much a dominant fib in that it's a covering price action at the minute, and it's like about this most recent move down, the retracement against this most recent high, and how things are going within those things, right? How things are going. You golden pocket 236, 50%. You know, these are all places where you might find a bounce. You look left, you can see in that fib it's a 236, which is like, that would be so very important. Again, you know, it's like going back to the weight of the information that you get here, like the significance of this data and everything it speaks to with regards to trend, momentum, and what might be going on in period of flux, and how that would be measured and defined with Fibonacci's that covered the entirety of that part of price action. And then that means that you know, if you're wanting to use these highs up here, 200 and whatever, or even like these ones here, which would still be relevant to, and then you might think, well, these are the Fibonacci levels that I'll use to add with confluence to my, or look between for confluence with my support and resistance horizontally. And then these, the most recent Fibonacci, where we haven't completely played out the move yet, and you know, yeah, sure, it's also got a slightly different perspective and inflection. Maybe for like when you were doing TA and you were down on like the 1 hour and the 30 minutes and so on, you'd be looking at that Fibonacci, which we can draw in here. Like, it's obviously already over to the right, but we could draw in there. Look at the golden pocket. See, that's beyond the 200 simple period. Say what that would mean for trend. What would that mean in the overall context of things? And what would it mean when you look left and see it's also the golden pocket? Anyway, that was the low to the high on this most recent Fibonacci retracement down the time. So that's not the same as that Fibonacci that Lepton was pointing out, which would be, instead of this, from this high to the, anyway, so if you draw it right, you can see where that is, and the golden pocket comes into there, 50% retracement of this Fibonacci I just drew, and loads of other information. You did the study in confluence, and that they really have like 2 charts, and we'd mark out all your horizontal levels. You'd then pick the ones that were most important. You probably had different colors for the lines and whatnot, and then you'd take that information, you'd put it on a different chart, or else delete all the other mess that you had at that point, and then do your data on top of it and look at that. So that'd be how you'd wrap loads of it together. Yo, Lepton. Yo. And then we got interrupted there doing the AMC by the wonderful Sarah Herrera, who says, thanks for that, Lepton, says, okay, Jamie, I need you to pay close attention. I'd like you to take a look at the piece of charts now before you dismiss. This is one of my jokes. Again, I need you to understand a piece of symbol for Papa John's. Okay, no problem. So we're looking at the Papa John's. PP, no. Yo, pizza. Yo, pizza, how you doing? So you're on the Cookie add-on for appreciation of the GME Fibs explanation. You're very welcome, Cookie. Thank you very much. Cookie, cheers. Wow. Guys. Oh, you guys. Thanks, Cookie. There, sure, pizza. You want to look at it, right? You want to look at it. Let's start the weekly time frames. I've looked at this before once for somebody, but who knows where, right? Pizza only goes up. Pizza. Everyone loves pizza. It's been decades of up for pizza. Hi, Coco. Do you like pizza? Oh, you don't like pizza? No. Unless it came from a packet and I shook it and made that noise, then you would eat it, whatever it was. Right, there is the, like, I mean, what's the point in that? It's just a permanent uptrend. It's not retracing against that anytime soon. If it did, you can draw it, like, you know, this is like where we can use this for horizontal levels where price actions previously come back to. And we hadn't put in that high before we had these moves back down again, so we can't say that that's relevant. But when it was at that high, this would have been your 236. Looking right, you can see that was relevant. In this trend, it's just, so we're on fibs anyway, that was your first high. You can see your retracement, once it broke the 236, went to the 50% and then continued. It had like managed to hold that support level. Price action then broke the 200 period moving average on the weekly and you went up again. At which point, gimme, 236, you broke it, you went down to the 50% again, right? So you're starting to see something that's like a pattern here. It might not have been immediately obvious to you either when you were looking at the chart. And there, here it is, you go through the 236. At this stage, you bounced, you did well. You went back down below it again, but with intense amounts of bullish divergence. So, like, really, I wouldn't even consider that violating the 236. Not on a weekly time frame. If you did violate, you didn't break it on a weekly. Probably did break it on a daily, but you had kind of this back up, back above the 200 period moving average again. And you're on again, right? You're on and on again. And so you can say that when this does have retracements, they most commonly are bullish and don't even extend beyond the 50%. Can you please give me a frickin'? Where are you, you frickin'? I'm not getting a new fib. I demand you work. Fib, give me your... Coco, stop it. Right, okay, bye fib, I have to get a new one. So you can see there's a retracement pattern there. When you go through the 236, you very rarely go back onto further than 50%. So you might think that that's like an important area where you would find a bounce. Historically, looking at it, and you'd be right, it would be. And then within that, you can see there was this area where we had two highs, bearishly divergent. We'll take the high there. Second one, highest one, to just define some of our Fibonacci. When you went back through your 236, you did it at pace. You went all the way up to the golden pocket before taking a breath, and then you went on, broke the 886 and went to a 1.13 extension. Not any further yet on that fib. That's interesting. Potentially catching the 200 period moving average now, the 886. So that would be interesting, right? So then let's say you were measuring retracements from highs, right? Bullish retracements onwards. The extension from this 2618, 1618, and it'd be important horizontal levels from that Fibonacci. Mister. Hey, got any more of those bullish Fibonacci's? Hey, you done this already, Tradespotting, you freaking lunatic. Anyway, so there's the two, right, you would pay most attention to. You would probably give this one line at gold bucket. And maybe you give it one of 236 if you're not being stingy with your lines. You probably also give it one of the 86. So there you've got some horizontal levels on a weekly time frame using the Fibonacci's. Serrera on the 2-day. Let's go back. Trades when you're not looked at it before. This is a 5-day catch 200 period moving average. Quite obvious what's going on with trend. And that 3-day, yeah, you're right on it. Bounce there. You bounce on it frequently in an uptrend. You do. You bounce off it up to the top side to put in new highs all the time on an uptrend. All the time. You get your most trend breaking moves to the top side when it comes back and tests support levels, right? You also had that in here, which is also a rocket outcrop flash, which is defining that entry. It's fantastic. Congratulations. And another one in a row there. And that was at 628 and it's $120, right? So that's like good job. Right. So then this is like just like doing TA on Microsoft, right? It's like very, 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 very good always. For some reason. So whatever, right? What's the fundamentals of the pizza market right now? In your face, that's what it is. Right, so I distracted myself, right? So this price action here, I don't necessarily need Donchian channels on right now. So this is very clear, uptrend, 2-day. You've lost that 200 period moving average. What did it say in the 3-day? You sat on it, 2-day, you've lost it, daily. You're below it. When you're below it, you usually come back and test the level of support before recovering. That's what's happened most stages. That wasn't a significant break. That was on support. Down, found support twice. Bounced. Covered the 200. Nope. Yep. Didn't really break it there. Broke it. That's anomalous. Hold. New highs. Right, you had a flash there. I can see rocket outcrops at 98.79. It went up to 141 from when it left there, so that was a good trade. That's hard to beat the margin you'd get on that. Oh, so that's what I'd be looking at. Then I'd take this. I've already done it, but take this out. There's the low. There's your high. You're 236 at this stage. You've managed to hold it or close to it so far. I see that comes in line with the rocket outcrop flash. Like this is something to look for if you're using that flash. And you're saying when price goes back, goes beyond it, you'd have this fib at the time, right? And you'd be like, well, here's a high, and then you go beyond there, the flash happens, right? You get given it and you're like, well, that's an exit signal. Where's my entry? Well, maybe it would be a 236 and a bullish, and something that's permanently bullish. You might think, well, a 236 retracement at some point, that's going to happen. Like, where's the first opportunity? And that was there, right? So you were getting with that signal now you get given from that, which is the best trading indicator I've ever used. It's easy to apply like basic TA and get like amazing results. But anyway, so there's an example. So, and that's for $150 down 98, right? With bearish divergence topside. Like what do you want? Like you want to be a trader apparently, right? So there you go. So 200 period moving average. There you've lost it on the 4 hour. There's a 236. Yo, Moon Man 999 add on for your thoughts. Your infinite patience and for taking all our Australopithecus type questions. Australopithecus. What does that mean? Is that like upside down? Moonman, thank you so very, very much. Thanks. Yes, well, no problem. You know, patience is a virtue, and it really helps because when you're talking to somebody, you obviously, as the person delivering the information, conceptualize and articulate it in a way that suits your own brain, but not everybody else hears it the first time, or the message you try to put across, or they've already got some preconceived ideas and you have to explain it slightly differently. And so patience helps a lot for me and the other people. It helps a lot, especially when you try to commit to something for a long time. Patience helps. So I am lucky to have you guys, and patience is good for both of us. It's good for both of us. Is that a dinosaur trace one? Probably Space Cadet. Probably. Oh, that reminds me. Good luck tomorrow, Space Monkey. So the 236, there's your golden pocket in at 51 bucks. What am I talking about here? Oh, there's a rock outcrop flash down there around 40.62. That's a long way away. Be 786. If the bottom falls out of the pizza market, that's where it's going, right? You're getting that. Would I jump in that trade now? No, this is the inverted edge. Potentially, you know, not really. That's the lower low in price action. That's bearish, hidden bearish divergence. That speaks to continuation. But you've held the 236 once, but you're now below the 200 period moving average, and you put in bearish divergence at the high. So, like, you know, maybe it does take. It's like maybe there's something bad going down in Pizza Town. What's going down in Pizza Town? What is up? What is up with this? What's your thoughts, Sarah? You're welcome, Moonman. What did you say, Sarah? What did you say about it? Now, before I thought this was one of your jokes, you need to understand it's a Papa John's. Yes, Pappy Culo. There is Golden Pocket. I can't not look at that without putting a line on it there when you look like you're about to break 236, right? And I don't know, right? Some deep dish, terrible problem, crusty stuffed crust pizza problem. I don't know why is it rolling over here? It looks like it's rolling over, yo. Daily time frame. I don't want to bet against like permanent uptrends. Like, I hate being that guy. Never mind on the internet being that guy, right? So we'll go back to this and we'll say, look, right, this is a warning not to go short on Papa John's, right? Big warnings. And then we'll go down to the early time frame and say, here's a very good short trade on Papa John's. If it fails at 236 there, and at the same time you fail to get it back above your center line, the RSI on hourly, and then in a 4 hour you fall back into the bearish control zone. If that happens, because you've got a negative trend on DMI, and the ADX come with it at 100 miles an hour to say it's a bit of trouble here, and then you look across on the MACD and you've gone through the 200 period moving average and it came on the right side of the trend there and it's broken it and it's not good. And if you get a test underneath that comes back and fails to break above, that's another signal. If that happens as this collapses, that's like 3 signals on top of all the other ones, and it's like a brilliant short signal on our time frame. But if you take it, you're crazy. Because look at the weekly time frame, right? Look at the amount of people that thought, and they probably had good reason in there with the bearish divergence, and if they'd managed to take profit in that, great, smart, right? But did they? It looks like an inverted head and shoulders at that point. They might have been like, and this is right. So what I'd do in this, I'd say daily time frame, right? This is how I'd trade this. Despite what the chart said for long term, right? That doesn't actually bother me. I'm not bothered, right? The daily time frame there, I'd take look back period from today, which is 26th of April. I'd go back to like 9th. I'd say the trade to take would be when this breaks its low in around here. Nah, that's not it. It's here. It's not even there. It's like in this trend. It's already broken it. This is in a downtrend and it might continue, right? And the trade's already on. Like, it's actually already started. And that was your entry there, maybe. It was, yeah. I mean, if you didn't take the bullish divergent there to cut your losses on the long, then so like this looks. I mean, how can I say it? You saw that? I can't say it. There's a really good short trade there. Cool, Max. Just over 999. Could you take a look at JRV, Jervois Global, Jervois, the project is moving right along. You betcha, Cobalt Mist. You betcha. Did I do enough on that here? Did I do enough on that, right? So, like, if you do go back to the top side, right, that fantastic could easily happen. There was, you made it above 236, you failed at 382. I like to see going through that at pace and targeting the golden pocket. That would have been confluent with a 200 period moving average. This is permanent bull trend, held the 236 of that greater Fibonacci. I know it slipped below this, like, again, which is shit. It makes me think again, short, quickly, that's a really good opportunity. It's already started. But then, you know, if it did go up to the top, I'd look at 120 resistance. I do like a lot of chocolate on my biscuit. That'd be the area, you know, not saying, right, if you're crazy if you take this, right? I was even hesitant to say it, but now I'm drawing it. There's like an entry. You've got a really pretty obvious area to manage your risk on that there. So that horizontal level, so you go above that, you break the 786. I mean, you can take it to the 86, but then you've got, why would you want so much loss? And then just getting back to where price action is at the minute. If you got that, which you probably won't because it looks like it's already screwed, but if you got that, then that would be already like, you know, you could maybe work with your stop loss a little bit and make that healthier, but it's not bad. Taking it to 236 would be another 3-1. Taking it to the next level of support there would be more. And then, you know, if it does make that move to the 50%, which is what it does when it makes retracements, which we talked about from the beginning, then you'd be laughing with that trade. Plus, it might go way more than that, right? That's already more. Like, it might go to the golden pocket. It might go down, fill the flash on the early time frame. The early flash, where are you? Where are you? Right, I think it's in around that golden pocket. Where is it? There it is. There's the 382. 75 bucks. So, you know, down there, all these sort of places, right? There's the area to take profit. It makes that, is that a line there? 85 is an area just above it. There you go. Boom. Boom. And that'd be it, right? That'd be probably where you'd be looking to manage your risk by taking profit. Those are the parts of the trade. Obviously, you've got 236 here too, so, you know, don't ignore it. So that's what I'd be thinking, but you wouldn't go short on that because you'd be absolutely crazy to do that. Hello, Jamie. Could you look at SST if you had time? You betcha I can't. Could you look at JRV? That was what we're going to do next. JRV. Yo. There's obviously also very strong uptrend there on a 1 hour. Let's look at it on a weekly, get a picture of this thing, right? So it was in downtrend. It was in what was forever a downtrend. Now it started to make a recovery. That recovery is taking it to 786 of the overall Fibonacci and through the golden pocket. That's interesting. From the breakdown point, you've got above 86. Yep, 86. That's great. So this is exactly where something gets to when it's absolutely screwed and it's given everyone loads of hope and it's going to screw them all again, right? It doesn't matter if it's going to screw them quite as bad as it's like down to here, but when it's done all of this, like, and it's got all the way up here and it's wonderful, well done, beautiful, fantastic, now we screw them again. You can see looking left, it's bearishly divergent between its own high in this trend. It's between its previous high at the other extreme that you'd measure it between, and it's failed to break those important Fibonacci's on that retracement to the top side, so that's not good at all. Then let's say you were going from what extension? This would have to be your only one else. There's too consistent. Your extension at 113, it's gone beyond that and then fails to break a horizontal. So it's either in the middle of doing a move that takes it all the way up here, or it isn't at all, and it's a huge trick and it's going to screw you. You've got volume coming in there after this dive. What is that, by the way? Right, that's just like the minute looks totally and utterly weird, that volume there. Like, this is where the trend started. That's where you want to see that volume. You actually had nothing, right? So then I got no confidence in this anyway. And then you have that, which is like your stepmom stabbing you in the back 20 years after you left, right? 20 years later, stabbing you in the back, fucking jars of rib in the front of you, like with some comment based on some nonsense thing just to try and bring you down. That's what that is. It's going to screw everyone. Some evil stepmom, right? Or like wicked old granny, right? And that, why am I saying it like that? Maybe it's a man. Anyway, so yeah, it's divergent. It looks terrible. There's your 200 period moving average. That's interesting. It's above that in the weekly. That's great. That's great. 5-day time frame, right? Still all bearishly divergent. You've got the positive trend and ascendancy in the ADX is right up there with you. That's fantastic. So this market's being pushed around. This bear's being pushed around. What's the market cap on this thing? 4.95 million volume. Market capitalization 1.5 billion. Okay, so it's not incredibly difficult to imagine knocking it about. So you had a lot of earnings reports in there. Right, 2-day time frame. What's been going on with this thing? Hey, you've just had earnings. Surprise, 6.3% down. Why is that a surprise? It's the first level of congestion. You find it 0.205. That's a huge move down. This is a massive range. What's going on with this thing? Daily time frame, get a better picture of this. Increasingly higher lows, higher highs. Just speak to some, that's the horizontal level that went through there. At that stage, you already had your divergence. And where's my trend line? So this was the peak previously, and this is when you met that peak in price action most recently. At that point, you had broken through this trend. See this trend on the top side of the RSI coming down here. Broke through that at this stage. That gave price action impetus to go on afterwards and break through that previous horizontal level. And you're above the 200 period moving average, and that's the daily time frame, so it's very difficult to bet against something when it's in a positive trend and it's been identified as such on such a robust signal there. You're above your own moving, above the center line, and you're pushing to the top side. ADX itself is very difficult to see what's going on there. It's a negative slope, but I wouldn't worry too much about that. It's in a strong area. If this continues, you've had this positive cross again. This is counterintuitive cross on the MACD, especially having put in bearish divergence and that being still very plain, even on this start of the trend on the RSI. No, this is like quite extended, this move now. 1618. So it's at the 1618 extension within this fib. And there's your 2618 at 1.25. I suppose it could wick to that level. I wouldn't be expecting it to do so, but it's made its way back into the bullish control zone on the daily time frame. And you've got the ADX says, I'm with you to a certain extent onto the DI positive. So that's good. That's good, but that's the counter. I don't like this. I don't like the divergence on this owl on the histogram. And I don't like the divergence on the RSI at all, but you're in the bullish control zone. I'm not going to argue with that. 4-hour time frame. Right, cool. Bottom information, price action going to the top side. That'd be silly. You've now got a rocky outcrop flash down at this previous low at 79. You can see that bearish divergence. Now, like you're at the 1618 extension here. The larger time frame say this is dodgy as. 4-hour, you know, cool, right? Things are going on. I'd wait for a candlestick entry if I was shorting it. If I was taking profit, I'd probably already be out, right? I'd be out in the morning. And then you're above the 1618. What's this going to do? Post-market pricing. It's still open, is it? What? No, market's closed. Of course, you're not going to have post-market pricing at this. Right, so, yeah, I think that likely it does come back to that 4-hour target there. That would be what with regards to Fibonacci moves from these most recent lows. Well, I've already got that 236 in here. It's broken below that before it put in that high though, so that's different. There's the next level. You want to hold at 0.865. If you don't hold 865, you're coming back down to 79. It already looks like a good short trade, to be 100% honest with you. Horizontal level I'd next aim for at 0.69. That's nice, but I'd actually put it back to the horizontal level here, golden pocket, and then perhaps look to 786 for a wick and manage it. If I was holding, like if I was short on this, I'd be looking to take profit at various levels, 200 simple and 4-hour time frame, for example. Golden pocket here on this Fibonacci, certainly, and then maybe in around here, right? And if I was following it with a stop loss, I'd be very, very close attention to it because it could move dead fast. Thanks, love, freaking amazing. You're freaking welcome, yo. You're freaking welcome, yo. Thanks, Comisk and Dane, for a good friend Nick. SSD, System Inc. Right, let's start on a weekly time frame. Whoa, fuck. Volume with it. At the end of the trend now, actually. At the end of the trend, a little bit weary of that volume after that, unless crazy people. And then the histogram and right, okay, this just says the same thing price action says. And of course, there's going to be divergence in that. Don't be crazy. Of course, there is. Weekly time frame. Right, bull still in the bullish control zone, still holding your own moving average. This hasn't been around all that long, 2 years ish. Wait a minute, how long? November 2020. Ha! Hey, not even 2 years. Right, so it's all happened in the last few weeks though. down to the 2-day time frame, get a picture of this trend. Your 200 period moving average is just showing up. You're still in the bullish control zone. Bloody hell. ADX still going, right? Wait a minute though. What's that? 3618. Well, you've already made it to the free. Wait, what the? But it's like right. Today. I'll take this high. No. Start here. We'll do this one. Mark out the levels. Here's your 236. When you broke that, you would have anticipated coming back towards the golden pocket. At that stage, you can also see if you could, it's the horizontal level where you might find support in and around there on the 2-day. You've got a gap. Oh no, there's been a bad murder. Is that what you're meowing about, Coco? You bad meowing about bad murder. There it is in there. Little head, little arm, little leg, another little leg, and then a big arm. Right, because it got flattened by a tractor, no less, right? Murdered by a man in a tractor. That's what the eyewitnesses said. And he sped off at 7 miles an hour. Look at that for a wick, right? They were all very bearish wicks there at that stage. And then Doji at that stage. It's like... so, and then a significant bearish candle. This is not enough. Perhaps even looks like a hammer, though. Tomorrow... Right, 2-day will get off. That looks like a potential hammer on 2-day. You've got a little bit of a wick on the bottom. And you have this murder underneath, which means that I'm not 100% convinced about it yet. Daily time frame also looks like a hammer there. Right, okay. You've closed this previous gap. You didn't manage to defend the bottom side of it other than this first wick test. Then you had the positive candle, opened and closed higher, but with again a rejection wick on it. This looks like it would be filled. As regards to Fibonacci retracements, at that stage you're not coming in to meet anything that would suggest you'd stop. I'd still be looking at a golden pocket retrace and this being the next entry. And then the 200 is just showing up, and at some stage you'll get tested, and that's on different time frames. It's just showing up. But anyway, there it is in the daily. I wouldn't think you'd get back down to 786 yet. I wouldn't be trading from that from here. I'd wait for some sort of failure against it going back up again, then maybe think about that. This might remind you of the high on GME at 483. There's your golden pocket there. If you go back beyond the 236 at this stage, that might be where you make it to, though I'd suggest you like the chances are you fail the 382. You fail it there slowly. It's a horizontal level. RSI is below the center line on the daily time frame. No, it's not. It's just above it, and we're in a bull trend, so we'll see how that goes. But if it did fill this gap, it would be below the center line. You're getting across on the MACD arg. And that you're quite far away from your 200 period moving average, but that doesn't mean that it isn't a valid target should that actually come through. And then your DI positive has been weakening since this part of the trend. You'll probably get a bounce there somewhere. Will it be on filling this gap? Filling the bottoms, testing the bottom side of it would be in at around $17, bought 20 change. Top side of it, 1958. We were already at. No, that's not the top side of the gap. What are you doing, Tradespotting? 1833. Well, I mean, it's a significant percentage, and your boy was run over by a tractor, so we're obligated to investigate. It's a horrific crime. 4 hour 200 period moving average comes in at the market structure low there before this trend started pushing up to the top side. Most recent leg of it anyway. Back down golden pocket also of that Fibonacci, that move. So this would be ultimate support finding the 200 period moving average from the 4 hour. You haven't really done anything to find that this trend won't continue, and that would be a really good big extension on the other Fibonacci, and it would be like interesting to get a bounce there. You would get a bounce there, very likely, unless somebody was determined to do a liquidity grab. There's the 1 hour 200 period moving average comes in at a level of horizontal support. It's black below where price action at the minute is, filling and defended the top side of that gap. You would maybe perhaps wick below it, see if price action managed to recover back above or close below the 200 period moving average. Subsequent to that would detail how long that trend would continue for. If it was to continue down, you can see you're below the center line here on the 1 hour. What are you looking for? 4 hours? You're below the center line. You've lost that. You're putting in downward sloping channel, and then you're putting in this, which is looking to be a failure of a scallop, and it will be. need some sort of a bounce or divergent low and then test that area and put in some sort of formation. Not seeing it in the minute. 1 hour time frame, as I was saying, you've got your negative cross at this stage. You've got potential positive cross coming on the MACD. You have got no bullish divergence in RSI. You're in the bearish control zone. I would say this cross likely fails, and then you've got the DMI says it does fail. It's going to fail. It's already likely to fail. It's already giving you a heads up. The ADX isn't coming with it yet, but we'll see. Looks like it. Looks like that cross is going to fail. Looks like it's going to come back, test 200 on the hourly down at 1830, or fill that gap, see something at 1550. And I like a lot of chocolate on my biscuit. So my first entry, if I was going long, it would be maybe a scalp trade or a bounce. I'd measure it out, go and see what it evolved into, but in around $14.20, 14.20 golden pocket retracement, that dominant Fibonacci on the upside. That'd be interesting. You've broken through 236 and you'd be holding out. Patience would be the name of the game there. Dodgy. If you're already in it though, and you're thinking like, what do I do? What do I do? I'd also be managing risk at the top side by taking profit at 23 should you get back there. And I don't think it's going to do it right now, but if we got back to 29, I'd also be thinking about it there. I'd also be thinking about it there, but would that mean it isn't coming down? No, like I'd be thinking that we'd find resistance in around 23 should you get back there. It'd be a big percentage move, obviously, but then, market structure and that would speak to it probably coming back around there. On the weekly time frame, back to that weekly, see that huge move. It's great and all. It's great and all, but some test and like this huge massive candle here that went through that includes that wick, some test within that give you a better picture over the granular detail with regards to demand and supply at those various prices, which if you had a strong answer to, you wouldn't worry about when price action then continued on. Until then, I think you're going to find a lot of hesitant market participants. Yo, Coco. Yo. Thanks so much, Nick. Thanks so much, Mick, Cobalt Misk, Moonman. Did I answer the question properly? Oh, that was that. Thank you so much. Yeah, what is an Australopithecus? Australopithecus. Sarah, thanks, Sarah. I hope that was helpful. Sarah and Shadow Lepton, absolute legend a number of times over. Cookie, thanks to you too. And El Picker earlier. Devin Dockin, who kicked it all off. Devin Dockery, nearly remembered it wrong, but I didn't. Thanks for being here, Lisa, you legend. And Sir David P, good to see you. Teenage Rude, a legend. Oh, I'll call the mods was stopping in. Hey, yeah, that's right. I put it a member-only stream earlier too. I forgot. That's not funny. All the pub, Merrick poors, all the Europoors, all the whatever. It's like try hard, and I appreciate desperately those people who support me as a member. And I know I've lost nearly 10% in the last month. It's like, what's that all about? So, gotta do everything to support the members so they know I care about them. Thanks, guys. Thanks. Oh, I forgot to connect Lumia stream up this time as well. Anyway, I've got to go and do work with Rock. I've got to go do work despite the time it is. What time is it? My goodness, 10 o'clock. Got to do some work. Thanks, guys. Great being here. Great show. Loads of little clips. And you can always fax me anytime you want for anything. Well, missed. Could you take a look at GRV? I got that. I'm scrolling back up there. I was calling Mills again. No, wait, did it? What happened? What's that? Thanks, love. Fucking amazing. That was before. Thanks. Doomslayer spots a Doomslayer from afar. Yes, this is true. Self-identifying. You can see them. Hello. Put your hand up if you're a Doomslayer. Put your hand up. Right. God, did it. We did it, guys. We did it. Congratulations. Another day, another Monday. What will it be like at Friday? Well, invite your friends. I'm sure there's stuff that can help them here. I'm sure there's information that can help them. Invite your friends. Thanks very much.